Good morning everyone. The purpose of this video is to provide you with some feedback from the markers of your Test 2 Document B. Question 2 Part A asked you to prepare the correcting journal entries for BAMTech to correct the error in accordance with IFRS, but this journal entry would be processed only during the financial year ended 30 September 2018, as the 2017 and 2016 accounting records had been locked already. There were no major issues with this part of the question. Most students debited shareholders for dividends and credited retained earnings. What a lot of students did is they had a separate shareholders for dividends accounts for ordinary shares and then another shareholders for dividends account for preference shares. This is not wrong, but please just remember that generally you can put your dividends, or generally you would put all the dividends owed to shareholders in a one account, as shareholders are shareholders. Alright, so you can just use one account being shareholders for dividends. Then another thing we picked up on is quite a few students correctly took into account the 37 million and the 33 million. However, they did not take into account the preference dividends of 5 million for 2 years. So please just remember that that must also be included. Question 2 Part B required you to prepare the correct at-acquisition pro forma consolidation journal entry. Now, in your consolidations textbook, the at-acquisition journal entry for ordinary shares and the at-acquisition journal entry for preference shares are always done separately. But please take note that you can do a net journal, and you would therefore end up with a net goodwill or a net gain on bargain purchase. Additionally, I would just like to remind you that when we have consolidations questions, when we mark, we apply a not used, not marked approach. So if you only provided us with an analysis of equity and no journal entries, we would not have marked your analysis as you did not use it anyway. That being said, if you got amounts wrong in the journal and you didn't show a calculation for non-controlling interest, then you would not have received those marks. So some issues with this question in particular were that students who did separate journal entries for ordinary shares and preference shares did not take out the preference dividends attributable to the preference shareholders when calculating the retained earnings for ordinary shareholders. Therefore, they got to a retained earnings amount of 160 million where it should have been 150 million. Additionally, a lot of students recorded non-controlling interest in preference share capital at proportionate share. Now, in the question, yes, you were told that as a company, they chose to measure NCI at proportionate share wherever possible. But the non-controlling interest relating to preference shares should always be measured at fair value. That is a principle that you have been taught, and it's a principle that is also highlighted in your consolidations textbook. Therefore, if you measured NCI at proportionate share, you would have lost those marks. So those were the two big issues relating to question 2 Part B. Otherwise, the question didn't go too badly. We then move on to question 3, and the first requirement of question 3 was to prepare the journal entries relating to all of the information above in the General Journal of Lenoa Limited for the period 1 January 2020 to 31 July 2020. Now, as you will see in the required, we only asked for journal entries for a 7-month period. If you provided us with journal entries before the 1st of January 2020 or after the 31st of July 2020, we did not mark those journal entries, and we did not penalize you for going forward and doing those journal entries, just because by preparing those journal entries you already penalized yourself by wasting time. So please always be aware of exactly the period for which you are required to prepare general journal entries and only work with that period. Alright, so we need to prepare the general journal entries for both of these leases. We have the lease of a manufacturing building and then the lease of a low-value asset. Now we know that with the lease of a low-value asset, we straight line those lease payments and recognize a lease expense, so we do not recognize a lease liability or a right-of-use asset. But for the lease of the manufacturing building, we need to do that. And you were given steps to follow. I dealt with that in a Facebook Live. And in Mrs. Jansen van Rensburg's videos, she has also mentioned the steps. So, first things first is you need to calculate an interest rate implicit in the lease. So, the interest rate implicit in the lease is calculated from the perspective of the lessor. And we know that the practical expedient is not available to the lessor. It is only available to the lessee. That is something that many students miss, and therefore in the calculation of the interest rate implicit in the lease, they used a payment of 155,000 Rand, and they did not take out the standalone price relating to the maintenance services. All right, so please just remember that the practical expedient is not available to the lessor. Now, to get the payment, we use the 155,000 lease payment, which is made every 4 months. And then from that, we deducted 3,595 Rand times 4. Now, that 3,595 Rand comes from the little note that you can see on the screen. That note says, her negotiations revealed that similar maintenance services on a lease of a similar manufacturing building are provided by third parties at 3,595 Rand per month. She could not find an observable standalone rental amount for a similar manufacturing building. Right, so that means we need to take that 3,595 Rand into account, as that is the standalone price of maintenance services per month. Now that 155,000 Rand payment relates to 4 months. Therefore, we need to times that by 4 to get the standalone maintenance service cost for that 4-month period. And that then means that we will have a payment of 140,620 Rand. Right, then the next issue in the calculation of the interest rate implicit in the lease was the PV. Now we know that the PV, we take the fair value of the asset that is being leased, and that is the 2,667,750. That is provided to you in the valuation certificate, which was issued to the company. Right, that was given to you, so that's what you use. A lot of students just stopped there and they did not take into account the deposit that the lessor received or the incentive that the lessor paid. Now, we always take the deposit away from the fair value simply because if that deposit has been paid, the lessor does not need to finance that amount. So please, you need to remember to take out the deposit and to add back the lease incentive paid by the lessor. Right, then the future value is the 750,000 Rand, which was provided in another note. That then gives you the interest rate implicit in the lease. The next issue was the calculation of the right of use asset. Now we know that the starting point for the calculation of a right of use asset is the initial measurement of the lease liability. So whatever your calculation of the lease liability gave you, we then marked it through, and that was then your starting point for the right of use asset. To that, we then deduct the lease incentive received by the lessor, and we go and add the deposit that we paid. But then we need to take into account any initial direct costs of the lessee. So we know that we received a tax invoice from Legal Eye, and Legal Eye gave us some advice on a pending CCMA case. That CCMA case had nothing to do with the lease, and therefore that 12,980 Rand cannot be included as an initial direct cost. We then have fees for the drafting of the lease contract. That can be included because that drafting of the lease contract relates to this lease. And then the annual revision of salary contracts also cannot be included, specifically because it doesn't relate to the lease. So you would then add the 47,963 Rand. If you just included the 78,200 Rand, it was incorrect. Right, and then what a lot of students did is they went and added the salary of the employee. Now that came from this little bit which says Tandi Malloy, working at the in-house legal department, spent approximately 10% of her time during November on negotiations with the company to finalize the detail of the lease agreement. She earns a gross salary of 60,000 Rand per month. So what a lot of students did is they went and said, okay, 60,000 Rand per month, times that by 10%. So 6,000 Rand needs to be added as an initial direct cost. That is not the case, and I touched on this in the Facebook Live relating to IFRS 16. The reason that we do not include the 6,000 Rand in the cost of the right of use asset is regardless of whether or not Tandi worked on this contract negotiation or not, she would have been paid the 60,000 Rand every month. All right, it is not an incremental initial direct cost. She's not being paid 60,000 Rand or 6,000 Rand because of drafting the contract. She is paid that 60,000 Rand because she is an employee of the company and she earns a salary. All right, so that salary should not be included. So if you included that, there was a negative half a mark because you applied an incorrect principle. Then there were just a few issues that we picked up on with the actual journal entries. So first things first is the practical expedient was elected by the lessee. You were told in information point 3, I think it was, that the lessee will choose to use the practical expedient wherever possible. Therefore, the practical expedient was elected, and therefore we do not recognize a separate expense for maintenance cost. So if you had debit lease liability, debit maintenance cost, credit bank, that is incorrect because the lessee elected the practical expedient. Then, when you had the journals to account for the interest expense, we had a couple students that said debit interest expense, credit accrued interest expense. The credit entry is always the lease liability when we deal with the interest on the lease liability. And then for a lot of students, they selected the wrong period of the interest. So you should have amort 7 and amort 8, whereas a lot of students had amort 4, 5, or 6. So please try and orientate yourselves, and the best way to do that is to draw a timeline so that you can actually go and count the periods that have passed. Then the next issue we picked up on was with the depreciation on the right of use asset. So first things first is what a lot of students did is they debited depreciation and then they credited accumulated depreciation for a right of use asset. That is incorrect. There is no accumulated depreciation on a right of use asset. You go and credit the right of use asset itself. Then a lot of students used the incorrect number of months, so they didn't use 7 months, they used 6 months. That 6 months is incorrect, which resulted in your depreciation expense being incorrect. Now, if you multiplied by 7 over 12, we didn't penalize you in any way, but please just remember that when you are dealing with an end of year, at the end of year, you recognize depreciation for the whole year. Whether you have to only prepare journals for 6 months, 7 months, 8 months, or 12 months, you always recognize depreciation for a full year. But if you multiply it by the correct number of months for which we asked you to journalize, then we didn't penalize you in any way. And then lastly, with the low value asset, I'm not going to go into too much detail because the low value asset is not the hardest concept you will ever find in accounting and especially in IFRS 16. And if you want some more guidance on the low value asset, you can then go and look at the IFRS 16 videos again. But basically what we noticed is quite a lot of students did not straight line the lease payments and work out the straight line lease expense. They literally just said debit lease expense, credit bank for 36,000 Rand. And then a lot of students incorrectly interpreted the amount. So they put, for example, the 36,000 Rand as the lease expense, and then the bank amount was the straight line lease payment, which is incorrect. And we also noticed quite a few students, they had a prepaid lease expense, but then the amount was on the credit side. If you have an amount on the credit side, it's not a prepaid lease expense, it is an accrued lease expense. A prepaid lease expense will be debited. Right, so next we move on to requirement B, which asked you to disclose only the lease liability section of the lease agreements in which the company is a lessee note of Lenoa Limited for the year ended 31 July 2020. Now, first things first, we had a number of students that provided us with every single note under the lease agreements in which the company is a lessee. That is incorrect because we only asked for the lease liabilities section. This was also 3 marks. If we asked you for all of the notes under the lease agreements in which the company is a lessee note, it would be worth way more marks. So please also be guided by your mark allocation. So the lease liabilities section asks you to disclose the undiscounted cash flows for the lease liabilities outstanding, which are payable as follows, and then you use the time bands as given in the question. Now, you were given the time bands being not later than 1 year, later than 1 year, but not later than 5 years, and then later than 5 years. And then you just need to go and put the undiscounted cash flows and multiply it by the number of payments that will be made within a year, between year 1 and year 5, and so on. So first things first, there were a few students that used discounted cash flows, which is incorrect. The note specifically states you look at undiscounted cash flows, so you then need to use the total lease payment of 155,000 Rand. Then the number of payments in each period made were also mostly incorrect for a lot of students. So once again, please draw out a timeline and be guided by the timeline in order to determine how many payments will be made when. And then lastly, in the later than 1 year but not later than 5 years period, students forgot to add the 70,000 Rand. Now that 70,000 Rand is the cash payment that the lessee is going to make to the lessor, because the lessor is going to get an asset worth 680,000 Rand, but the guarantee is for 750,000 Rand. So there will be a cash payment of 70,000 Rand made to the lessor. So that was left out. And then we move on to requirement C, which asked you to present only the lease liability in the statement of financial position of Lenoa Limited as at 31 July 2020 in accordance with IFRS. So now the lease liability is a non-current liability as well as a current liability, because there will be a current portion of this lease liability. So you are to show us both a non-current liability and a current liability relating to the total lease liability. And then once again, the periods were incorrect. So in order to get the short-term portion of the lease liability, you would have gone and taken payment 8 to 10, because that is what is going to happen in the next financial year. You then amort that and you get 309,197. And to that, you then add the interest amount that is accrued, simply because the year-end dates and the payment dates do not coincide. That then gives you your short-term portion of the lease liability. And then to get the long-term portion of the lease liability, you would take your 1 input 7, second function amort. You then get your balance, which will be 1,787,159. To that, you would then go and add the 41,284, which is the correct amount of the interest accrued, and from that you would then go and deduct the short-term portion of the lease liability. So please remember that when we ask you to present only the lease liability, if there are lease payments, interest, anything that's going to happen in the next financial year, that needs to be taken into account under the current liabilities. That then brings us to the end of this feedback video. I hope you have found this useful, and good luck with your preparations for the class tests.